good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And your wrap-up is for Monday, the 4th of December, 2023, time 6:40 p.m. Central Time. Before I get going, I'm going to remind you, today it ends. So at midnight Central Time, this is all done. So if you're interested in taking advantage of our Cyber Week sale that I've told you all the way through, you can either click the link up here, or you can go to our website at iraepstein.com, buy any of the one-year research products. If you're a new subscriber, you'll be entitled to the original charting course, the Bollinger Band, or the Outside Day. If you have other questions, you can always click here. My staff's not there, and the sale ends at midnight. So you've had your chance. A lot of people took advantage of it. You won't see this again this year. So this is your last chance to get these for free, and I hope you enjoy them if you do so. All right. Let's get back to where we were and make life easy for ourselves. The gold market had one of the wildest days of the year. I think it was $100 range from high to low, and it did go crashing down. Why? Well, we'll talk about it when we see the chart action. Suffice to say, nothing goes in a straight line. Nothing grows to the sky forever. I mentioned that last week, and I said, don't chase it. Wait for the market to come to you. Now, the market is up tonight $15, so you're getting a bounce in it. Most of the markets are trying to hold on right here. Let's talk about where we're at. When we look at a weekly chart of closes, you're well over that. So your bias is to the upside. You're looking to be a buyer. When we take a look at the daily charts, all right. So you've hit your upside counts. I just got to tell you that there's many ways to do this in the chart, but suffice to say that you could also just be looking at this, flip over from this point, which was 2050, to basically down here, 1950. It takes you up to a 2150 number. Now you'll say, what did he just say? Let's take a look at it and see if I can get the charts to come back, and I can. And I'll just give you an idea what traders often look at. I think this is very difficult to call it this way. The S&P formation did this much better than this. But some traders will call this a shoulder, another shoulder, a neck. Think of the V. And if the market takes off and closes over this range right through here, and this was Monday, November 27th, only a week ago, so don't tell me this is old history. You basically pull the bottom and you flip it over. And that gives you what this formation would be worth. That is one way to look at it, and here's what it did. And you tell me that it didn't just get about there. Now, let's put on our work, because chart formations, they're fun, and I use them, but you got to be careful. If you take a look at all this, let's go to the next day because of what happened. And you're still over all the key moving averages. The trend is up. The bias is up. You're still over the 18-day average. However, is the trend up? What defines a trend? Higher highs, higher lows. You tell me if the trend is up. Let's get rid of this. Let's take a look at today's action. You went from 2152 to 2038. You took out the prior break low. You now do not have an uptrend. You have a higher high and a lower low. You've gone to neutral, and boy, what a range. Tell me you see anything like that on the charts prior to this, and I think we'd both be laughing. You don't. And you can see what the market did. Why did this occur? If you follow my enhanced Bollinger Band course, again, free to you right there, or buy it. You can go to our website under the word education, iraepstein.com. It's there. I teach over and over and over. You don't buy over Bollinger Bands. The traders that did, by the way, they bought it $50 over, they got their heads handed to them. Why? Only 5% of the time you stay out of it. So I know you're going to tell me this is the time, Ira, and I know it. I said it over the weekend. This is where people come in and they go, you don't know what you're saying. It's not going to be that way. This proved it. On a full-size futures contract, $100 an ounce times how many ounces? 100. How much did you lose? $10,000 from high to low. You think that's easy to live with? I don't. I think that's monstrous. And what else happened? You tell me what else happened. Let's go back another day. Because you got to analyze things when you do them wrong. I didn't do anything wrong here. This is Friday. You're over the Bollinger Band. The work is bullish. You've had higher lows, higher highs. Do you buy over Bollinger Bands? Slap me across the face if I ever tell you to on this, or sell under one. I won't. I'd have to have made a serious mistake, which I do make, all right? I'm not inhuman, but I won't knowingly do that, that's for sure. So the market gives you the pop up today. You're way over it. Where are you going to put a stop? Back under that low? And to make matters worse, on the way down, you start losing the embedded reading, and that's what you ended up doing. Where should this market go now? Where should it go? I know you find this hard to believe, but 2020 is very much in the cards, because markets, unless it gets back over this high right away, you've made a trade top. And when you lose the momentum of the embedded reading, more times than not, you'll attack the closest moving average. That's how I'm viewing it. When I look at the gold-silver ratio, okay, it didn't go anywhere. You're getting a correction in it, but silver's overall still stronger than gold as long as it stays under the 18-day average of closes. And silver wasn't to be let alone. And where did this happen from? Tell me, you don't see the Bollinger Bands right up here? Was I telling any client to buy at a Bollinger Band? Oh, it is not going to happen, all right? Number two, if you took my enhanced course, did the market go up and make new highs first? I don't know what else to tell you, okay? I mean, all the rules are there as to what I teach, and I am not saying anything other than under my technique, you were never a buyer today at or above the Bollinger Band, and you weren't buying on the way down today. No chance in this market or the gold. Copper market, where did you stop? Against the upper band. Now, you normally pull back, and how often do you hear me tell you, I don't like to have my clients buy the first challenge of a 200-day average. Often I'll say that on the 100 and a Bollinger Band especially together. You often stop there. But if you launch again and there's another moving average, sometimes that's where you go. So you're looking for the probabilities. However, is anything on any of these metals saying to be short? Absolutely not. But we're also screaming. You don't buy Bollinger Bands. You take profits against Bollinger Bands. The other guy's buying the Bollinger Bands. You're not supposed to buy the band. In the platinum market, you lost the embedded reading. Out you go. So this is a market I told clients to buy last week. Out they go. And I told them to buy only half their normal size position. For the whole week, I was telling traders, you trade small because we're looking for corrections in stock indices and in metals. Part of the reason is the cycles were running out December 1st and 2nd in two of the stock indices. I was looking for a pullback, and why not the metals with it at the same time? Now, did I know it would stop? I did not. I was hoping it would get up further here, right up to this zone. It didn't. And when the game ended by day's end, okay, so the market's down $11. It's not a break of any size. If you were buying the market on breaks in here, you didn't get hurt, but you're out. You have to be out now because you lost the embedded reading. Do you see that? And when you lose the reading, the odds favor price is going to go back to the key moving average. Here's your dilemma in platinum. I have the dilemma. You're right at the key moving average. The 100-day average doesn't always have to go to the 18. It's the closest moving average. You're literally right on it. You've hit your downside targets. That's what I'm trying to say. Could it go lower? Of course. Should it? No, you got to close under the 18-day average to get bearish. You're nowhere near it at this point in time. And when you're over it, you have the bias up. You're in a corrective mode, and that's how I'm reading that. What about the dollar? Well, you had an embedded reading. The market started coming back up, agreed. And when it did so, it lost the bearish reading. So where should price go? I think price in the 18-day average and the 100 might want to come together there and stall out. So what was today? What if I tell you it was profit-taking day? End of a thrust in the market that went crazy in the metal markets where it was a never-ending number. Bitcoin joined the parade, 42,000, and people are going, it's going to the moon. Well, I've been telling clients that are in my morning subscriber video, the only way to play Bitcoin is you just buy it and don't call it as trade. You can't. The chart makes no sense to be a buyer. However, the event makes sense because the event is going to be getting ETFs in that market right away. I wish I knew the day. The SEC keeps holding back. They can delay it a little more, but they're supposed to release it before the 10th of January. And when it comes out, people will suddenly say, it's legit, it's legit, there's a sky. And they'll say, this is it. Now it's going back to $300,000 a coin. You do remember Tom Lee saying that of, Fundstrat? I just look at it and I go, people got nuts at the top. No friends. All these guys that created these companies got killed because the sky, it got the better of them. These are bright guys. They don't understand most of the time that sensationalism will break the people that follow them. And that's what happens with these people. They are guilty of it. You got to rein yourself in. Could it go there some point in the future? Nobody knows, okay? Why 300,000? I don't know, all right? But I do know that most people lost most of their money. If the guys that got in years ago, they did fine if they cashed out. If not, they watched 2/3 of their wealth fall back because these were markets trading for pennies when they came out at some point. And these stocks went up dramatically, okay? The individual coin, not the stock, the value of the coin, and then it crashed. And the $30,000 level became a norm for it. I just talk about it because it's interesting to talk. Well, the gold market is interesting too. Everything moves in numbers. Remember that. 21,000 is a new high number. Markets, when they get to new high numbers, often see profit taking. Then on the pullbacks, the big boys come back in to see what the market's made out of. I talk about this. I'll talk a lot more in the morning. Subscribe to my research, and I'll see you in the morning if you do that. Otherwise, for the rest of you, I'll see you tomorrow night. Take care.